And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. We saw a record $986 billion in stock change hands on Friday. This is the largest dollar value ever traded on U.S. equity markets. That's according to Goldman Sachs. Think about that. Largest ever. There was also massive volatility around ETFs. How did they hold up? Let's talk to Chris Hempstead from IndexIQ, Nick Colas from DataTrek, along with Dan Wiener. He's chairman of Advisor Investments, and he's also the publisher of the Independent Advisor for Vanguard Investors. Chris, we've always heard the ETF haters say, wait till we get a lot of volatility. A lot of these ETFs are going to blow up because everyone's going to head for the door at once, and they're not going to be able to handle it. Well, we got historic volatility last week. You watch the ETF trading as a professional. What happened?
Look, I mean, the volume on Thursday and Friday in particular was extraordinary. There's nothing we've ever seen. The first hour of trading in ETFs saw what would be normally a full day's volume. Market makers, liquidity providers, the exchanges, CBOE, NASDAQ, and NYSE Arca have mechanisms in place to allow for fair and orderly markets. The old traditional verbiage we use on the floor. The markets held up remarkably well. ETFs did not see large premiums and discounts relative to the action we were seeing in the market. And the accessibility of liquidity from 9:30 to 4 o'clock, and even beyond that, was unlike anything we've ever seen. Remember, mutual funds, you're getting one source of pricing at the end of the day. ETFs afford you the ability to get in and out all throughout the trading day, and we saw a massive amount of gravitation to using ETFs.
So we always get complaints that liquidity isn't as strong. There was liquidity here. You might complain the prices went down really fast, but there was liquidity. Is that your point?
That's exactly right. I mean, the liquidity was in line with where the underlying assets were priced. You know, we talked about high yield. Yeah, there was pressure on high yield bonds, but there were people moving out of that asset class, not just using ETFs to do it, but they used ETFs all day as opposed to at once at the end of the day in a mutual fund.
And Nick, you and I were talking about high yield funds. The largest high yield ETF, HYG, lost 20% of its assets, outflows, 20% of its assets last week. High yield spreads blew out. And what happened with these high yield ETFs?
No, you're right. The high yield outflows were 100% of all fixed income outflows last week when you add in JNK as well as HYG. And yet high yield spreads did not make a new one-year high. The one-year high was 470 over treasuries. We got to 460 on Friday, but not much worse. It shows you that the market held together.